Hello, everyone. Welcome to the TBR Webinar series. Today, Principal Analyst Chris Antlitz will be discussing the CSP ecosystem is gearing up for a major edge build-out. The U.S. and China will lead the world. Before we get started, just a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them in the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here is Chris to begin the webinar.
Great, thanks Sarah, and welcome everybody. As I look at the audience list, not only is this one of our largest attended webinars, but I see significant diversity in who is attending. So I see broad interest from across the ICT ecosystem, which is great because I think it underscores how edge computing is permeating the market, and the interest level is very high for this technology area. So hopefully everybody finds the content interesting and engaging. We're going to be sharing key findings from our recently published Telecom Edge Compute Market Forecast Report. Came out a couple months ago. And we're going to be showing some data and some key findings from that report. So this is me, Chris Antlitz, Principal Analyst in the Telecom practice at TBRs. My email address, feel free to reach out to me if you would like. Before we jump into the content, I just want to show everybody the scope of syndicated research that the Telecom practice at TBR has. So we cover the global telecom ecosystem, and we do dedicated reports on vendors, on operators, as well as topical areas. Topical areas is things like 5G, NFV, SDN, private cellular networks, and of course, edge computing, which is what we're going to be talking about today. I also want to note, this is just syndicated research. We also do significant custom project work for companies all across the ICT ecosystem. Okay, so before we jump into the material, I want to go over the taxonomy just so everybody is on the same page about what we are talking about. Edge, there are many different definitions for what the edge is, and we had to make our own, and we had to do this to boundarize the market sizing, as well as to make sure that we're focusing on where edge is coming into the telecom space. So essentially what we're talking about is data centers that reside in relatively close proximity to the data generation source. So the endpoint devices, wherever there's data being generated, having compute resources closer to those endpoints. What do we mean by close? So what we're talking about is data centers that are within 30 miles of the data origination source. Now that 30 miles number is not arbitrary. That has been heavily researched. So what we did is we looked at the maximum latency threshold that many of the new use cases are going to need for this tech, for requiring the use of edge resources. And we use the 10 milliseconds as the cutoff. So basically what we're saying is we are looking at use cases that require 10 milliseconds or less of latency. And in order to do that, you need your compute resources to be in a certain distance from the endpoint. Otherwise, you can't get to that latency threshold. And that's predicated on the speed of light and number of hops that the traffic needs to go through in the network. So we're talking about data centers, relatively small data centers that are within 30 miles of data origination sources. Now, the location types vary. It can be anything from a central office to a cable head end, ag hubs, baseband hotels, power rooftop sites. Those are all fair game. It could also be locations that are stadiums, airports, could be Whole Foods stores where Amazon is putting edge stacks in those basements. Those types of locations, anywhere where the CSP owns the infrastructure in that location is included in the scope of this research. So edge is also called different things. So far edge, multi-access edge, mobile edge, network edge. Essentially, these are all the same thing. And so just so that we're getting our nomenclature and our phrasing on the same page here, it's basically all the same thing that we're talking about there, just different ways to different nomenclature. So on the chart on the bottom here, we have 3 segments. We have the core network, traditional edge network, and the far edge network. The far edge network is what we're going to be talking about today. I want to make note that the edge is not a new thing. The edge has been around for decades. There's what we call the traditional edge network, and that was really built out because of CDN requirements for content QoS. And companies like Akamai, the Limelights of the world, those are companies that drove that, the development of that ecosystem. And then, of course, the core network, where you have central data centers and the brain of the network in a traditional architecture sense. You have that aspect of the network as well. But again, we're focusing on the far edge network in this study. So some more fine print here about what's included and not included in the data you guys are going to see. We are talking about spend by CSPs, so communication service providers, and we are including in that telecom operators, cable operators, and web scale companies. Web scales is Amazon's, Microsoft's of the world. So the spend data that you're going to see is CapEx spend that those types of entities are investing in edge infrastructure. We are not including spend by other types of companies. So enterprises investing in edge for their own environments, that is not included in this. It's only included if the CSP owns the infrastructure. The other thing that is not included in the data is the endpoint devices. So ARVR goggles, the drones that might be being used interfacing with the edge network. That spend is not included. We're only looking at infrastructure. We are including the components of a data center environment. So servers, storage, networking, optical interconnects. We're also including services that is attached or related to this infrastructure. So deployment related services, maintenance related services, professional related services, and managed related services that pertains to edge, far edge environments. We're also including close to the box software, things like data center infrastructure management software, virtual infrastructure management, as well as management and orchestration type platforms. That type of spend is also included in the market sizing. And again, we're looking at 10 milliseconds maximum latency. And because of that, we're boundarized within a 30-mile radius for those edge infrastructure, for that infrastructure to be distanced. Okay, so that's the taxonomy, what's included, what's not included. So we're all on the same page now. Now we're going to go into the content of the report. So we're going to set the stage first, and then we're going to go into some data. So the CSP ecosystem is at the early stages of a major edge build-out. And we believe that the infrastructure ramp up is going to start in 2021. We're going to get into why that is, but just teeing up some of the things that we're going to come back to in subsequent slides. The US and China are going to lead the world in edge compute infrastructure deployment. And that's going to be driven by two things. One is domestic webscales, so the Amazons, Microsofts of the world, as well as telecom operator transformations. So think about virtualization, digitally transforming the telco using the new architecture, which is a virtualized cloudified architecture where you put virtual network functions into NFVI, which is essentially data centers. Network transformation is going to be the primary driver of edge build-out by telcos and cablecos. RAN evolution, so vRAN is going to be a key component of that. That's also going to drive a much larger and broader implementation of mini data centers to run the vRAN traffic. Webscales are preparing for big builds. We see this already. We've seen in the last year, we've seen Rakuten building out their network in Japan. There's 4,000 edge sites in that build. We've also seen Microsoft, Amazon, Google make public announcements that they are working on edge compute builds at the far edge, working with a range of partners, telcos, tower companies, etc. So these are examples, recent examples that show that the webscales are actively experimenting with edge computing technologies. They're actively building partnerships, and they are looking to scale the business. One more thing to note here is that for the most part, the webscales are going to be using ODM gear for the edge stack. So with the exception of Microsoft, who is using both OEMs and ODMs for their Azure stack infrastructure, if you look at Amazon, Outposts, and Anthos, for the most part, that is ODM gear. I'm bringing that up because there is, as we're going to see in the data, this is going to limit the OEM opportunity to sell data center infrastructure into the key players in this ecosystem. And we're going to get into that with the data. So the webscales, why are they doing this? They're building out the edge to extend their central clouds to unlock new opportunities. So we see this with Microsoft with Azure Stack as an example, where they are working with their enterprise customers and moving more workloads that are latency sensitive or security sensitive into edge environments to meet the requirements of those enterprises. And there's other reasons as well, but essentially the webscales, for the webscales, the edge is the next evolutionary phase of their cloud build-outs. So they started, for the most part, with central cloud build-outs, and we've seen those build out all across the world. The next phase of that evolution is to move to a distributed computing architecture where they have edge resources interfacing in real time with central cloud resources, where they can enable new use cases. They can support new use cases that weren't supportable before, things, especially things that require low latency. Real estate and energy related costs are some of the biggest hindrances to scaling the edge, but we are seeing innovation take place here, and we're seeing favorable market dynamics mitigating these challenges. So let me talk a little bit about some of those things. One of them is on the physical infrastructure side. The webscales are building standard reference designs where they can use low-cost hardware and put that into ruggedized low-cost hardware and put that into edge environments. And it's standardized around their specs. They're also innovating on power densities, how much compute and store you can stuff into a box. There's a lot of innovation going on there. Some examples of that can be found in the TIP and the OCP programs. There's also internal initiatives that are taking place as well within the key web scales. So favorable market dynamics. One of the things that we're seeing interest in is repurposing retail real estate and office space for edge environments. So as we know, in the post-pandemic world, there is a rationalization upon us for real estate. And we're going to see structural changes to retail and structural changes to office commercial real estate. And some of these locations are in very desirable locations. And there is tremendous interest about repurposing some of those sites and putting edge compute environments in them. And those sites can be bought in some cases for pennies on the dollar of what their prior purpose was. So we do believe there's going to be a land grab as this rationalization phase takes place. We're already seeing some instances of this happening. Okay, so let's talk about the virus and the impact of the virus. So I like to put it into two phases. The first phase is short-term pain, and the second phase is near and long-term gain. So short-term, which is through this year and probably through next year, we're going to see significant economic problems. We're going to see waves of bankruptcies. We're going to see rationalization of real estate use. We're going to see governments get more involved in economies. We're going to see some gyrations, and this is going to happen globally. Once we get beyond that, the opportunities for edge compute are even stronger than they were before the virus. And the reason that I believe it's going to be stronger is we're seeing governments and businesses around the world look for ways to apply new technologies to mitigate risks to their businesses and societies. And edge computing is one of the key technologies that's being looked at to do this. And we're going to give examples of what that is. One of them is visual intelligence. So that manifests itself in many different ways. But some of the ones that are more widely talked about is thermal imaging to see if people have fever. So it's going to be used for contact tracing purposes. Spatial distancing, making sure that people are in compliance with government regulation. And we're going to see it for surveillance, general surveillance type use cases. For security, could be for making sure that property is protected. It could also be used for public safety purposes. So we put all of that under the umbrella of visual intelligence, and I can tell you that there is tremendous interest in that category of use cases around the world. We see this in many different countries, even in Europe, where you might think that some of these use cases would get bogged down in data privacy and other issues. We're actually seeing quite a bit of interest in areas like that. So this is going to implicate edge computing. And that's just one example. We're going to share some more examples. So we see the virus short-term pain. Long-term, we believe that the virus is going to accelerate trends that were already existing, which is things like digital transformation, not only of companies, but also of societies. How do we leverage technology to improve society, improve safety, things like that. And it's also going to accelerate things like automation and how to change business processes so that businesses can be more productive in a digital world. So we're going to go through this adjustment to the new normal. and edge computing is going to be a key technology. 5G is another one that we see very broad interest, much broader than we saw before the virus. And it goes across verticals. We see tremendous government interest for various use cases, and there is pent-up demand here. Okay, so against that backdrop, let's talk a little bit more about use cases. So I put 6 use case categories down here. These are the 6 categories that we believe are the most, are going to have the most demand initially. So the most money is going to go into these 6 use case categories. Now, I know I'm probably missing some key ones here, can't list everything, but if you look at the drivers of why would we invest in edge compute infrastructure, I think for the most part, these 6 are the, among the top. So bandwidth optimization, it's not really that interesting. But the reality is that this is a key use case for edge compute. So where you're not having to go through the backbone of the network, you can offload traffic. There is cost savings associated with that, especially if you're a telco or a cableco. That is a key use case. Network virtualization, so things like virtual RAN. Again, this is about the evolution of network architecture, and virtualization, edge computing is a key part of building out a virtual network. So in the case of vRAN, where you have a virtual BBU housed in an NFVI stack at the edge of the network, that's coordinating traffic from different antennas that are out in the field and doing that coordination. That's an example of virtual RAN. Rakuten is doing something like this, some flavor like this. Not true vRAN, but they're getting pretty close. I think what is coming there. And we do see tremendous innovation going on there. Mavenir's of the world, parallel wirelesses, Alpheostars, they're driving that market forward. I want to note with vRAN is that we talked about 30 miles. When you're talking about vRAN, it's actually, you're looking at a maximum of about 10 to 15 miles. So your topology, your grid needs to be more dense, your edge grid for vRAN, because you're talking about microsecond level to coordinate the traffic. Some of the engineers I've talked to said you got to be around 200 microseconds of latency. And in order to do something like that, if you're using full fiber for the backhaul and the front haul, you're looking at about 10, maximum 15 miles for something like vRAN. So again, just another example of how much latency influences what type of infrastructure needs to be put into the field. Content delivery networks is another, it's not a new area. This is really an extension and evolution of existing CDNs, just caching the content even closer to the end users. A lot of CDNs are built in regional and metro centers today. What we're talking about is extending that even closer to the endpoint for QoS improvement, things like that. Especially when we talk about gaming and QoS on gaming, that's very important to have that infrastructure closer to the endpoints. AR and VR is broadly applicable here. So there's all different types of sub-use cases in that category. Could be things like training employees remotely, could be telemedicine, could be gaming, could be experiential type uses, like touring a museum, for example, from a remote location. These are all use cases of ARVR, and we do see tremendous interest in that. Education is another big one. Having a more immersive educational experience. This is something that there is tremendous interest in these things, much more so than we saw even a year ago. Cloud robotics automation, we see a lot of interest there by manufacturers, mining companies, energy companies, where you can control machines from a remote location. That's for worker safety. It's also for productivity gains. There's different reasons why you would do cloud robotics automation. And again, that's a big category, but those are some of the examples of what we see interest in today. And then last but not least, visual intelligence. I want to stress that one because when you talk about mitigating public safety concerns and the need for additional security, this is a big one. And we're seeing not only are companies going to invest in this, but we're also going to see governments invest big money in this type of use case category. Okay, so let's talk about some data here. Again, I wanna underscore what is included and not included in this market size. So I'm going to go through this edge market in phases. So we starting in 2019 and most of 2020, and even going back to the 2015-ish timeframe where we started to see operators begin their network evolution journeys towards a virtualized cloudified architecture. The bulk of spend to date for edge computing has been for traffic offload, CDN, and virtualization. So those are the three use cases that have driven the vast majority of edge compute spend according to our taxonomy to date. Going forward, it's going to be the other ones are going to be key drivers of the growth. In 2020, we did soften the market, the pace of growth, and as well as in 2021, and we pushed it into 2022. We think there's going to be some delays because of the virus and the economic issues. We pushed some of that spend out to 2022. Regardless, at some point in the early 2020s, there's going to be a huge ramp up. The stars are aligning for that to happen. We think 2022 is going to be the golden year, but we'll see how the crisis plays out. The point I want to stress here is that this market is moving. There is going to be a ramp-up period, and this is going to be broad-based spend across the CSP types and their end customers. It's going to be very broad in what is supporting, what this infrastructure is supporting. We're going to break it down into different slices. Okay, so we showed the total market size. Now we're going to slice it in a couple different ways. So what we did here is we took the market size and we sliced it by CSP type. So web scale, cableco, and telco. When we talk about web scale, we're talking about 9 companies. We call them the big 9 in our research. Alibaba, Alphabet, Amazon, Apple, Baidu, Facebook, Microsoft, Rakuten, and Tencent. Those 9 are the key ones. They are going to spend a tremendous amount of money on edge compute infrastructure, tens of billions of dollars over the next 5 years by just those 9 companies. And they are the only 9 that we're including in the market size. Just so everybody's on the same page here. When we talk about the web scale segment, we are only including the spend of these 9 companies in that market size. Okay, so I want to talk a little bit about each type of CSP and the drivers there. So web scale spend to date has mostly been Rakuten with their network build in Japan. Again, I said they are building 4,000 edge sites. Those 4,000 edge sites fall within our taxonomy. And they are delayed, but they're moving forward. And the spend is happening on a certain cadence. As we get into this year is a lot of Rakuten spend again, but also we have Amazon, Microsoft, and Google are all moving forward with their edge compute initiatives. So we do see them moving forward with Outposts, Wavelength, Azure Stack, and Anthos Those are the primary plays there. And then after we get through this year, 2021 and beyond, we're going to see a huge scale out of those platforms. And it's not just going to be in a few countries, it's going to be across many countries. We estimate that there's going to be over 1 million edge sites according to our taxonomy. That's total among all of the CSP types, over 1 million cumulatively by the end of this forecast period. Now that is all different form factors of edge stacks, right? Edge environments. So that could be everything from a relatively large central office down to a very small, one small box that is in an enterprise environment that is owned by the CSP. That would be considered far edge according to our taxonomy. So, and then everything in between there, right? So you'll have some form factors that are in between those two extremes. Most of the edge sites that have been built to date are in relatively large environments. So central offices, stadium environments, in the basements of stores, those types of builds. When we get beyond this year, the big scale out, when we start to scale into the hundreds of thousands of sites, that's going to be smaller, mostly smaller environments are going to drive that. So think about aggregation hubs, base of cell tower, rooftop sites, those types of locations could be on the premise of an enterprise if it's owned by the CSP. So that's really when you get into the hundreds of thousands of sites en route to that beyond 1 million cumulatively at the end of this forecast period. Okay, so one more thing on this slide. So the cablecos and the telcos, cableco spend is mostly Comcast. A couple of the other ones are dabbling with this. Comcast has really spent the most among cablecos to date. This is things like virtual CCAP and virtual DAA. It's part of the evolutionary transformation of their network architectures to a virtualized, cloudified type of an architecture. Same thing with telcos. A lot of this is going to be for the transformation of their network architecture. So with virtualization, as well as, so in addition to the net new use cases where they might have a UCPE on the premise of an enterprise that they own, but they're providing edge services to that enterprise. That's also included there. But I want to stress that for cablecos and the telcos, if you were to break that spend down by what is the justification for the edge investment, a large portion of that is going into the transforming the existing network architecture to the new architecture. Okay, so spend by region. More than half of these CSP sites are going to be located in the US and China by 2025. That's cumulatively. So more than half is going to be in those two countries. And then there's everybody else. Who is in the everybody else that is of note? So you've got Korea, you've got Japan, you've got Germany, Spain, France, the UK. Canada will dabble with this. Maybe a few other developed markets. And then you're going to have, some semblance of builds in the emerging markets. But this is very much being driven, at least in this forecast period, a lot of this is in developed markets. The vast majority of the spend is developed markets. And China is going to be the biggest spender. So we all know that China is aggressive with the 5G builds and some of the use cases that they're planning to do as part of government mandated initiatives. And a key component of those initiatives requires edge compute. So there's going to be many billions of dollars just allocated to edge compute build-outs across that country. And the density, the grid, the density of the grid in China is going to be much more dense than in some of these other markets. So it's driving that high infrastructure spend number that you see there. Okay. So in terms of key takeaways, and we're going to open up for Q&A, this market has legs. We see broad interest. It's going to scale. There's going to be a ramp up at some point in the early 2020s. We think it's going to be 2022. We could be wrong, but our curves, and based on what we're hearing from people and what we're seeing in roadmaps, it looks like 2020 is when stars are going to align, and we're going to see a big ramp up across the CSP ecosystem in edge spend. COVID-19 is a catalyst. It's going to accelerate the trends. It's going to drive investment in infrastructure. After we get through the pain phase, it's going to be a very robust demand for this type of infrastructure, for these use cases, and you're going to need the edge infrastructure to support those use cases. US and China are driving this market. More than half of the sites are going to be in just those two countries. Telcos and cablecos, the bulk of their spend ultimately is going to be for their network transformations. There will be other reasons as well, but the reality is it's going to be part of their network transformation. So again, I want to make sure everybody's on the same page when we talk about this. We are moving from purpose-built appliances that have hardware and software tightly integrated together into disaggregated infrastructure, where you're separating the software and the hardware. In some cases, you're using white box hardware, and you're virtualizing the software layer, and you're putting it into NFVI. And NFVI is essentially data centers. So you're basically putting the network into, you're putting the functions of the network into a data center, is essentially what's happening. And that's for the operators to run their existing businesses, so their existing connectivity businesses. And then on top of that, there's the net new stuff where they're supporting things that go above and beyond that, where they need separate infrastructure to support those environments. And then last but not least is the big nine. Webscales are going to own a very large portion of edge infrastructure resources globally. And it's going to be Amazon, Microsoft are going to be, so if we took the big nine and we segmented out who's going to spend the most, Amazon and Microsoft are the top two. They're going to spend, according to our research, they're going to spend the most of the nine. But the other nine, we're still talking, the other seven there, we're still talking billions of dollars for their initiatives. Google, we're not as sure with Google. Google, we don't see the same commitment there and the scope, but I think ultimately they are going to jump on this bandwagon, and I would say they're probably going to wind up being the third largest spender on edge infrastructure among the big nine. At least that's what we think is going to happen. Okay, so with that, I'm going to open it up for questions. So I'm going to go write down the question list. So just bear with me here. Okay. Yeah, just hang on 1 second. I'll wait for that ringtone to go off. Okay, so the first question is, far edge can be on-premise enterprise considered as local. So yes, so it can be if, it depends on who owns it. who owns that infrastructure, who bought it. So if the CSP bought the edge infrastructure and it happens to be put on the premise of an enterprise, that is included in our spend data. If the enterprise purchased the infrastructure, it is not included in our spend. The next question is, with 10 milliseconds being maximum latency, today's carrier-neutral, interconnection-dense facilities can serve most of the urban areas in the U.S. Do we need deployments in buildings, in other areas, and what % of the U.S. population does this cover? So it's not just, that's a little bit of a complicated answer. So we need more density in the grid. Existing infrastructure is not sufficient for what is coming. Also, who owns what and who wants to own what is something else that needs to be considered. So does a web scale have a vested interest in having their own locations where they have their own edge infrastructure? I think we're going to see some of that. They might not want to use some of the existing facilities for whatever reason. There's also facilities like the telco central offices that can be repurposed. Hey, Sarah, can you mute that line that has the ringtone coming on?
Sorry, what?
Do you hear that ringtone?
No.
Okay, I took care of it.
Okay.
So I was able to take care of it. Never mind. So for the locations, if you have, the CSPs have their own locations that they can redevelop their existing central offices and ag hubs as examples into edge pots, and we're seeing that happening. You know, that's another example where you can use some existing real estate and put more resources, densify that grid. There's also different economic models. So and different types of locations. So for example, tower sites, tremendous interest about putting edge compute pots at the base of cell towers. And not just for vRAN, but for supporting things like drones, right? Autonomous drones, things like that. You're not going to be using existing facilities. So there's multiple reasons why the existing facilities, they're fine and they're going to be leveraged. They are being leveraged. But there's reasons why you're going to need to go beyond that and go to different types of locations. And there's going to be different models and rationale for doing that. All right, there's a lot of questions. I'm going to get to as many as I can in the next 15 minutes. There's probably 30 questions in the queue here. So the next question is, have you considered whether the telco sites will meet the physical security requirements of the hyperscalers? And can they be upgraded to support edge compute? So yes, they can be upgraded. We've seen some instances of them being upgraded. It's costly. This is not cheap. And, you know, that's a key component of the market size, right? We do believe that it depends on the central offices, right? Some telcos took better care of their central offices than others. Some of them are a little more cluttered and need some more work to get to where they need to be than others. There's different reasons. But generally speaking, I think that yes, the central offices are critical locations. And I think, yes, they will be upgraded and overhauled to support edge compute. It just makes sense to do it, right? Real estate, you know, repurposing existing real estate is better in most cases than buying new sites, which could be more costly. It really depends on the real estate situation and what the alternatives are. The next question is TBR's expectation that telcos will take web scale solutions as the foundation for their network functions at the edge? What I'm saying is that the web scales are coming to eat the telco lunch. And the web scales are probably going to accrue a disproportionate amount of the value that's created from edge computing. That's what I'm saying. And if they use the telcos for coloing or for interconnection or for accessing, their end users, there's going to be different models around that. We see some of those today, but ultimately, I think that the webscales are the ones to keep an eye on. I think that they have a very compelling proposition that they're bringing into the market. Next question is, do we have a breakout for vRAN sizing in the telco versus enterprise? We don't have that in this report. That's in a separate report where we look at RAN evolution and the traditional to the new architecture. We did publish a telecom prediction special report where we did provide virtual RAN market size data, and that's available to everybody. If you ask Sarah after the call, if you can have a copy of that, we can make that available to you. The next question is, how did you equate 10 milliseconds to 30 miles? Okay, so I've talked to several several engineers, RAN and optics. I've talked to some academics that are doing research studies about AR and VR and the infrastructure requirements to support those types of use cases. And we talked to quite a few people about this topic. And, there's a range of distances. What we did is we said, okay, we looked at all of what everybody told us, and we boiled it down and said, okay, it looks like 30 miles is the max. And that's based on speed of light and an average number of hops in a network if you're at that local area, a local area topology. So 30 miles was the maximum when we assessed all of the research inputs that we got. The next question is, are CSPs letting the fox in the henhouse by allowing hyperscalers to establish edge locations on CSP edge sites? I think so. With that said, though, I think that the telcos can monetize this opportunity, but the scope of that monetization will be limited. So I see opportunities to sell co-location services where they're renting out space in central offices or other telco-owned real estate facilities. That could be an area of revenue generation. It's not that interesting, quite frankly, not that high margin, but the reality is that could be a scalable, accretive business proposition for telcos. And I think some telcos have been very vocal about that. Some of the old RBOX and ILEX in the States, for example, have publicly said that they want to do coloing with the webscales, and they're going to open their COs to them to do these types of things. So we have seen some of that. The next question is, 5G is not going to be widely adopted for years. And with COVID, I think it will be delayed. I know it's a hot trend. Everybody talks about it. Using fiber often overlooked. Yes, fiber is going to be used in many of these use cases for the edge. So I want to stress that this is multi-access edge compute. So it doesn't have to be 5G enabled edge compute. Your access medium, your last mile access medium could be fixed or wireless, feeding the traffic into the edge environment. So yes, I agree with the fiber comment. And again, this is multi-access edge that we're talking about here. This is not just 5G. Okay, next question is, do you have a breakdown of this spend by, okay, we showed those. Next question is, do you exclude on-premise owned by web-scale companies? That's included. So if the web-scale owns the edge stack, even if it's on the premise of their end customer, that would be included in the market size. So things like Outposts, Azure Stack, those things are included. Next question is the compute density in China because of private-public partnerships, i.e. Tencent and China Mobile. I think it's government, I think given what the government wants to do there, and the national initiatives that are underway there, you would need a very dense grid to support that. And in terms of the partnerships, I think that the telcos are going to have, the telecom market in China is going to be different from other markets because the telcos in China are, they have protection status. So what I mean by that, and maybe that's the wrong way to phrase it, but what I mean by that is the telcos are being given, their opportunity is being provided to them and it's being protected by the government. So instead of normal market competition, we are seeing that the telcos are being allocated opportunity, and they're not just, the web skills aren't just going to come in and take the opportunity from them. So it's being orchestrated, that's being orchestrated and managed by the government as part of these national initiatives. So it's a little bit different how things are operating there. But yes, we do see these partnerships with between the BATs and the domestic telcos in China to drive the initiatives. The next question is, who does TBR anticipate to lead in China with regard to edge infrastructure spend? Will that also be Amazon and Microsoft? So not so much. I think it's going to be the BATs, and it's going to be the big three operators in China. So China Mobile, Unicom, and Telecom. And then you have Baidu, Alibaba, and Tencent. And the suppliers are going to be Huawei, ZTE, Fiber Home, and then China Tower, CCS. Those guys will do the services for those implementations. Those are your key players in that particular country. The next question is, what is your prognosis for success and spend by telcos for third-party application edge compute as a service, as defined by the GSMA operator platform? Third-party application edge compute as a service. I'm going to have to look into that. I don't have an opinion on that off the top of my head, so I'll have to get back to you on that. The next question is, that one. Next question is, you mentioned a few use cases like ARVR and visual insight and observation. Those are not network functions as drivers. Is this what pushes the transition to the big nine dominating spend? Yes, I think that's a key driver. So, and yes, so what you're saying is those are going beyond the network transformation type edge spend for the NFVI, for the traditional telco, cableco type network environment. So yeah, the web scales are going to take the net new stuff above and beyond that. It's a separate opportunity, separate justification for investing in that infrastructure for the web scales. Okay. The next question is, you see no telco emerging. So I do. So I'm a little concerned about the opportunities for telcos in the edge in terms of new value creation. With that said, there are some telcos out there that are actually doing a really good job, and I think that they are going to be successful. And the example I would like to give there is Reliance Jio in India. Keep an eye on that one. Really interesting what's going on with that telco and what their plans are to do in India. And they have a huge head start relative to the other incumbents in that market. So that would be an example where I think a telco in the traditional sense is going to really be successful in leveraging these new technologies and driving the new value, right? So the digitalization of the Indian economy, for example, I think Reliance Jio is going to play a key role in that. Next question is there a different big nine if you exclude hardware spend, i.e. software and middleware? No, I don't think so. I think, so we call them the big nine because they're spending the most in terms of raw CapEx investment. And they also have the broadest initiatives for this in this area. So I also want to stress that for software and middleware, a lot of these web scales, they're building their own. They're building their own platforms. They're building their own nano and analytics engines and automation platforms. They're building their own. In some aspects, I would say 5G core, right? If you look at Microsoft, they're acquiring the core through Metaswitch and a firm network. So I think that even if you include the software and the middleware, I think that you'd still come to the same list of the big nine. Next question is, are these CSPs building their own infrastructure as in the past, or is there greater incentive to share infrastructure now? So yeah, we do see much more shared infrastructure coming into the interest. This isn't new. This has been going on, but I think the scope and the types of companies that are now agreeing to this is expanding, and I think it makes a lot of sense. So yeah, shared infrastructure definitely is going to be a pervasive trend. I got time for like one or two more questions, so just bear with me here. So the question is, the numbers on the graphs were compute, store, network, and other software and services. The titles indicated edge compute, but believe you clarified earlier it's beyond servers. So yes, it is more than just servers. It is servers, storage, network, and software, so close to the box software, so management orchestration platforms, virtual infrastructure management platforms, those types of things, operating system related things. And then services, it's the full life cycle of services. So everything from deploy, integrate, manage, maintain, all those types of services are included as well. All right, I got time for one more question. Do you see the big nine preferring MTDCs over telco COs? So I think the web scales are going to build edge pops in a broad range of locations. We're going to see their stacks at the base of cell towers. We're going to see their edge stacks in repurposed retail and commercial locations. We're going to see their edge stacks in other types of pops as well. So I think the telcos are going to be a key one just because they have so much existing edge real estate that can be reused. But we are also going to see edge. The web scales have edge sites in much beyond just the telco type environments. Okay, so apologies, I couldn't get to everybody's questions here. I see there's like 10 or so more. Appreciate everybody joining the call today. I hope you found value in this. And Sarah, I'll hand it back over to you.
Thanks. All right, everyone, please feel free to reach out to Chris with any more follow-up questions. If you have a few moments, we would appreciate if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us on Wednesday, June 17th for Cloud is Becoming Higher Touch. Thank you and have a great day.
Take care.